Want to build a $1 million portfolio in just 10 years? Sounds ambitious, right? But with the right stocks, consistent investing, and the power of compounding, it's more achievable than you think. In this video, we're diving into 5 top stocks for 2025 that could skyrocket your wealth. Let's get started. Before we dive in, a quick disclaimer. I'm not a financial advisor, so always consult one before making investment decisions. Also, don't forget to like this video and hit the bell icon so you never miss our weekly investing tips. Ready? Let's jump into the best stocks for 2025 to build your $1 million portfolio. First, let's talk about why building a $1 million portfolio in 10 years is possible for U.S. investors. The stock market has historically delivered average annual returns of about 9 to 10% over the long term, according to decades of data. Even with a conservative 8% return, consistent investing and the magic of compounding can work wonders. For example, if you start with $100,000 and add $1,000 monthly at an 8% annual return, you could be well on your way to $1 million in 10 years. But here's the key. You need the right stocks, ones with strong growth potential, solid fundamentals, and exposure to booming sectors. In this video, we've handpicked 5 stocks that balance high growth with diversification to manage risk. These aren't just random picks. They're based on recent analyst recommendations and performance data as of August 2025. Sound good? Let's meet our first stock. Our first stock is Palantir Technologies, ticker PLTR. If you're looking for a high-growth stock to supercharge your portfolio, Palantir is a name you can't ignore. This company is a leader in artificial intelligence and data analytics, 2 of the hottest sectors for U.S. investors in 2025. Why Palantir? Palantir specializes in big data analytics, helping governments and businesses make sense of massive datasets. Their platforms like Gotham and Foundry are used for everything from national security to corporate efficiency. As of July 2025, Palantir's stock has delivered a jaw-dropping 439.31% one-year return, making it one of the top performers in the tech sector. Analysts love it, with strong buy ratings due to its expanding client base and growing commercial contracts. Growth potential. The AI revolution is just getting started, and Palantir is at the forefront. With companies and governments investing heavily in data-driven decision-making, Palantir's revenue growth is expected to stay strong. Its ability to secure long-term contracts adds stability to its explosive growth. Risks to consider. Now, Palantir isn't without risks. Its high valuation and volatility mean you'll need a strong stomach for price swings. But for a 10-year horizon, this stock's growth potential makes it a fantastic pick for U.S. investors aiming for that $1 million portfolio. How to play it? Consider allocating a portion of your portfolio to PLTR, but balance it with less volatile stocks. If you're new to stock market investing, start small and add to your position over time using dollar-cost averaging. Next up is Applovin Corp, ticker App, another tech powerhouse that's lighting up the stock market. If you're excited about the mobile tech boom, this stock is for you. Why Applovin? Applovin is a leader in mobile advertising and app monetization, powering ads for mobile games and apps. As of July 2025, App has posted an incredible 330.78% one-year return, driven by the explosive growth in mobile gaming and digital advertising. With more Americans using smartphones for entertainment and shopping, Applovin is riding a massive wave. Growth potential. The digital advertising market is expected to keep growing as businesses shift budgets to mobile platforms. Applovin's proprietary technology, like its app discovery engine, gives it a competitive edge. Analysts are bullish, citing its strong revenue growth and ability to capture market share. Risks to consider. Like Palantir, Applovin is a high-growth stock, so expect some volatility. Economic downturns could impact ad spending, but the long-term trend for mobile tech is upward. For U.S. investors, this stock is a great way to tap into a fast-growing sector. How to play it? Add App to your portfolio for exposure to tech growth, but pair it with more stable stocks to balance risk. If you're building a $1 million portfolio, this stock's potential could be a game-changer over 10 years. Stock number 3 is Amer Sports Inc., ticker AS, a rising star in the consumer cyclical sector. If you're looking for a stock that taps into lifestyle trends, this one's for you. Why Amer Sports? Amer Sports owns iconic brands like Arc'teryx, Salomon, and Wilson, focusing on sports equipment and outdoor gear. With a 250.22% one-year return as of July 2025, it's capitalizing on the growing demand for health, fitness, and outdoor activities. As Americans prioritize wellness, Amer Sports is well-positioned for global growth. Growth potential. The fitness and outdoor markets are booming, especially post-pandemic. Amer Sports premium brands appeal to high-income consumers, and its international expansion adds to its appeal. Analysts see strong upside, with consistent revenue growth expected over the next decade. Risks to consider. Consumer cyclicals can be sensitive to economic slowdowns, as spending on non-essentials may dip. However, Amer Sports' premium positioning and global reach make it more resilient. For U.S. investors, this stock adds diversification outside of tech. How to play it. Include AS in your portfolio for exposure to consumer trends. It's a great complement to tech-heavy picks, offering growth with a touch of stability. Our fourth stock is Fastenal Co., ticker FAST, a rock-solid pick in the industrial sector. If you want steady growth with less volatility, this one's for you. Why Fastenal? Fastenal supplies fasteners, tools, and industrial products to businesses across the U.S. With an implied change of 112% as of July 2025, analysts are optimistic about its growth. Its one-year performance has been strong, and it's a go-to for industries like construction and manufacturing. Growth potential. Fastenal benefits from the steady demand for industrial supplies, especially as infrastructure projects ramp up in the U.S. Its efficient distribution network and consistent revenue growth make it a reliable pick for long-term investors. Risks to consider. Industrial stocks can be affected by economic cycles, but Fastenal's essential products provide a buffer. It's less flashy than tech stocks but offers stability for your million-dollar portfolio. How to play it. Use FAST as a core holding to balance the high-growth tech stocks. Its steady performance makes it ideal for U.S. investors looking to diversify. Finally, we have CME Group Inc., ticker CME, a financial services giant that adds stability to your portfolio. Why CME Group? CME Group runs the world's largest derivatives marketplace, handling futures and options trading. With an implied change of 9% and a strong track record, it's a large-cap stock that analysts love for its stability. As businesses and investors demand risk management tools, CME is a backbone of the financial system. Growth potential. While not as explosive as tech stocks, CME offers steady growth and dividends, making it a great anchor for your portfolio. Its global reach and essential role in finance ensure long-term relevance. Risks to consider. Financial stocks can face headwinds from interest rate changes or market slowdowns, but CME's diversified revenue streams make it resilient. For U.S. investors, it's a low-risk way to round out your portfolio. How to play it. Allocate a portion of your portfolio to CME for stability and income. It's the perfect counterbalance to high-growth picks like Palantir and Applovin. Now that we've covered our 5 stocks for 2025, Palantir, Applovin, Amer Sports, Fastenal, and CME Group, let's talk about how to put it all together. Building a $1 million portfolio requires strategy, not just picking great stocks. Here are 3 key tips for U.S. investors. Diversify across sectors. Our picks cover tech, consumer, industrial, and financial sectors to reduce risk. If tech takes a hit, industrials or financials might hold steady. Invest consistently. Use dollar-cost averaging to spread out your investments over time. For example, adding $500 or $1,000 monthly can help you build your portfolio without timing the market. Stay patient. The stock market can be a roller coaster, especially with high-growth stocks like Palantir and Applovin. Stay focused on the 10-year goal and don't panic during dips. Finally, always consult a financial advisor to tailor the strategy to your financial situation. Your starting amount, risk tolerance, and goals will shape how you use these stocks. There you have it, 5 stocks to build a $1 million portfolio in 10 years. Together, these stocks offer a balanced, high-potential portfolio for U.S. investors. What do you think of these picks? Drop your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.